Sandip Sabharwal joins in on the show. Sandip, hi, morning. Just intrigued by SEBI's new FNO eligibility criteria and the possible inclusions thereof. It's got Zomato, it's got Avenue Supermart, and even Geo Financial Services. What do you make of the tentative inclusion list?
Yeah, so the inclusion list seems to be much greater than the exclusion list. So that could actually increase the entire sort of trading universe in the F&O basket. Whereas the news flow initially indicated that the regulator wants to restrict, even the finance ministry official, restrict futures and option trading. So I think these are two very sort of opposing news flows. So let's see what they finally approve.
Contradictory as it may be, but the fact that Zomato may make its way into FNO, a fairly liquid, highly traded stock, but on the other hand, Sandeep, even an Avenue Supermart.
Yeah, so Avenue Supermarts is not very liquid, although it's a large company, but Zomato obviously is a very liquid counter. So I think if at all the list has to be expanded, then obviously Zomato should be a part of it, no doubt. But we've seen that illiquid stocks like Avenue or many others, like there are some which are proposed to be excluded also, tend to then not have so much volume in FNO.
Sandeep, morning. Let's get in your take on IT because some wouldn't have anticipated the kind of moves that we've witnessed in the month gone by, the sheer outperformance within the entire IT basket. Is this a sign of what's yet to come, or has already the positives been priced in?
I would think to a large extent positives have been priced in because the stocks have moved in anticipation of some sort of recovery. That recovery is not yet imminent in the results of the companies. Like the companies indicated maybe possibly a 1% higher growth. On that, the stocks have moved by 20%. And the valuations are now, even for the larger companies, nearly 20% premium to historical valuations. Like as the most of the market is trading at 20% premium on a broad basket also on historic valuations. So I would think the near-term upside now would be capped. People keenly watch for September quarter results to see if there are actually signs of improvement.
Okay, fair enough. That's the take coming in on the entire IT basket. And what's been the assessment when it comes to the auto sales numbers, given the fact that for the most part, a lot of heavyweights like Tata Motors CV, Eicher Motors VCV or Maruti have been either in line or have been below what the street was expecting in the month of August?
Yeah, so I think more or less in line with expectations, like you said, and the companies had indicated as such that they will be undertaking inventory correction prior to the festival season. Now the key is festival demand because inventory levels have come down somewhat, but they are still high relative to normal levels, but okay relative to pre-festival inventory levels. So festival demand becomes very important for these companies now. Credit growth in the like most of the four-wheelers tend to be financed, and the credit growth in the overall system has been coming down due to tight liquidity conditions. So the key will be to watch out for festival season sales because that become very important for them now because the stocks are still hovering like just around 5% down or at 52-week highs. So the next 2-3 months sales data will be very important for the stock prices to sustain. If demand doesn't recover, then we could possibly see the stocks faltering.
Sandeep, where else do you see pocket or potential of outperformance in the market right now?
The markets have moved up substantially, like last 12 days, continuous up move. So it's tough to find pockets of value. On the large cap side, I think directionally what will happen is that stocks like Bharti Airtel, where the fundamentals keep on improving and there's not too much choice, that could continue to do well. We could see stocks like the auto sector could consolidate. Some large cap banks could see performance because they have underperformed so much. If there is some possibility of easing rate cycle, then NBFCs tend to benefit more than banks typically. So that is one segment where we saw some up move last week. So that could be something which could do well over the next 1 year, not in the immediate term. Pharma sector has been seeing continuous improvements in margin. Most of the companies deliver good results. Valuations have moved up, but then it still continues to be under-owned. So I think that's one segment which could again outperform.
I think banks will try to bridge that gap of underperformance and begin participating.
The main issue, Aisha, with banks is that fundamentally they are in a position where, although most people think that if RBI cuts rates, it will benefit banks, actually, because nearly 60% of the loans are now repo linked, a cut in repo rates without an improvement in liquidity actually hits their margins. So I think that's the fundamental challenge facing banks at a time when RBI says that they will keep liquidity tight. So I think these banks will. So the case for outperformance will come in when, if and when the liquidity eases out. So I would think that because they have underperformed so much, so there might be a small amount of outperformance because of the sheer underperformance. But other than that, fundamentally, there is no case for any significant upside.
Okay, there you have it. That's the view coming in. Meantime, let's also get in some stock-specific reactions and a word coming in from you, Naresh, as to what the outlook is when it comes to an Axis Bank and some of the other private sector banks. How are they looking on the charts?
So, if you look at all the private banking names, they've been very sluggish sideways. Say a little bit of an uptake on ICICI Bank. Axis Bank continues to be around that 1150, 1170 mark for the last almost 4 weeks. If you go to Kotak Bank, it's been around that 1770 to 1820 mark for the last almost 2 months. You have HDFC Bank, which continues to struggle around that 1600, 1650 mark. ICICI Bank is the only one which made a little bit of an uptake and is closer to, say, 2% away from an all-time high. Even a State Bank of India, which is on the private side, a large one, has been sideways. It's been at the same price for the last 4 months now. So that remains the concerning point for the markets in terms of momentum. Majority of the large banking names have been sideways. They've not seen a downtrend as such, but they've been sideways for the longest time. Once we get a tech here, maybe the trend changes.
Okay, fair enough. That's the view coming in. Meantime, just curious to get in your take, Sandeep, on what the outlook is for some of those sugar companies. Yes, of course, we did see that relief come in last week with the government removing the restrictions on ethanol production. How are you looking at this space in particular?
So I think removal of ethanol restrictions, although it was expected, it's good that it's come a month in advance of the start of the sugar season. So that helps the oil companies also plan their tenders and the sugar companies to start supplying from the beginning of the season. It will improve the cash flows of the companies significantly, which got restricted. And sugar prices also at pretty decent levels. So the companies are making money on the sugar side also. So overall, the sector now seems to be reasonably positioned, and it got underowned also as people sold after last year's restrictions. Now, two things need to be monitored now. One, whether some exports will be allowed. So if those will be allowed, then it will improve the cash flows of companies even further. Otherwise, inventory levels will become high. And second, whether ethanol prices also see an uptake, which is also expected. So I think these two developments will need to be keenly watched to judge the overall upside potential. But directionally, I think it's a positive move.
Meantime, Sandeep, let's also understand what your outlook is when it comes to some of these defense-related stocks and how you're looking at the PSUs, because while, of course, it was the darling sector for the longest time, since the month of July or a little bit before that, we've seen that enthusiasm weaning off. Is that a sign of what's to come?
In the near term, yes, because the sector became very overowned. I think most retail investors are full of defense stocks, and the results across the board were not enthusiastic. Like some companies did underperform, a few companies did reasonably well still. but then it's still, the valuations are still very high. So I think valuations need to be moderate further. And if they moderate further, then there could be opportunities, because in longer term, the indigenization story continues. But because of the near-term growth concerns in some companies and high valuations, we should see some more correction.
Sandeep, I'd like to draw everyone's attention to Paytm. It just got corrected, then it got smashed, and then it really lost its relevance, so to speak, in terms of A, as a business, and also B, in terms of a market perception. Nothing has changed, but the stock has gone from 350 to about 620, 630. So, Sandeep, could Paytm do what, let's say, Zomato did? There was a lot of disbelief, but when the business turned and it surprised everybody.
Yeah, I think Zomato has become a poster boy of the so-called new tech companies, because everyone tends to compare every other company with Zomato. It's a totally different business. Like, they were in a duopoly, they had significant market share, the competitive intensity was reducing as some of the other players moved out of that business. And now Zomato and Swiggy had such large market share that it's very tough for someone to enter unless they want to make huge losses. So comparing that company to any other company, I think, is fallacious. Like you rightly said, nothing much has changed for Paytm. Uh, in fact, they have also divested some of their businesses to Zomato itself. And that also, in my view, was sort of a sign of desperation to get in cash into the company. So we'll watch. Let's see how the business recovers going forward.
Okay. 621. It may not happen this year. Certainly not this year. Certainly not next year. But FY27. So optically, you know that which way SBI is moving in terms of profitability. It's not very expensive. Could SBI be that good allocation? 5-10%. Just fill it, shut it, forget it.
Because you pushed him to say 1 lakh crores. He was not saying it. But then
he did not deny it. He did not deny it. Let me put it this way.
Which management will say will not reach there?
Okay,
no,
if not, okay. So let's
the
look at
point
numbers.
is, they'll reach there. Yeah, for sure they'll reach there. Which year is the only question.
Exactly.
So like Nifty will reach 1 lakh at some stage, but which year is the question? So I think the key is that I think the credit growth guidance seems aggressive, in line with what's happening on the overall credit side and RBI's restrictive stance. So I think that will be the key thing, whether they can continue to grow at that pace without compromising on asset quality, when most of the other banks and the system seems to be slowing down. So I think that's the small near-term concern. Longer term, if they are able to manage the NPAs on the book, then obviously the stock can go much higher.
Okay, meantime, let's also get in a take then as to what the outlook is within the entire cement sector. And I wanted to get in, Sandeep, your views on this space, largely owing to the fact as well that there's some recent reports that have come out talking about how consolidation within this space, which has been ever so evident, is going to bode well for the medium-term margins, although near-term there are still some risks that persist. Just to get in your view on the kind of consolidation that we've witnessed at a very hectic pace, Sandeep, within the cement space, and what that means for some of the smaller players.
So on, what's happened is consolidation has happened, but there are a large number of groups now. So it's not a 2-3 player market. It's a 5-6 player market. So to that extent, competitive intensity will remain. The capacity addition cycle is very, very intense. For example, this year itself, I think 35 million tons plus of capacity is coming on board. And to that extent, I think there's huge optimism around this sector, but they've been trying to increase prices, and those have become unsustainable. Prices fall back, although cost improvements have led to margins holding up. So I think the valuations are, I would say, still not attractive enough for this sector to be bought into.
All right, Sandeep, good to have you on board as always. Thank you for joining in. And let's get in those mid-cap trading calls, all the while keeping track of the pre-open rates, which are, by the way, indicating a pretty strong start for our own markets. Kunal, what are you tracking?
So there'll be a buy from the real estate pack, Oberoi Realty. That's a chart which has made a very strong comeback. The stock has managed to make a multi-swing low, just closer to that 1700, 1750 odd levels. And on Friday, we saw the stock getting back into a bounce mode. So which means that the risk reward is attractive for traders to look at a fresh buy. Short-term targets of 1860, stop loss to be kept at 1750.
All right, that's a stock from the real estate space. Naresh, what are you looking at from mid-caps?
So looking at the whole diagnostic space, the momentum is strong. That is where Metropolis has been consolidating in a very tight range for the last 2 months. 2000 on the downside, 2150 on the upside, a classical flag formation here, a breakout in the making. Once it sustains 2150 levels would be a strong breakout. A target price of 2400, stop loss at 2050.
All right, there you have it, top mid-cap calls. Let's move on. Here are some